The nightmare on Downing Street continues. It is Thursday, the 11th of April. As you can see from the headline, Brexit. UK and EU agree delay to 31st of October. Unbelievably, well, is it really unbelievable with Brexit that they've decided to grant an extension, or at least for now, to the 31st of October, Halloween. Of course, this delay coming late last night, or be confirmed as late last night into the early hours of the morning. I believe 1:15 UK time, 2:15 local time. If we just have a quick look over at the reaction of the market around that time, very limited. Very limited. In what was expected, the delay was expected. Yesterday we were talking about how there was probably more chance of an interest rate decision change for the ECB than us leaving on the 12th, obviously tomorrow. So that's been priced in. The positive news, I guess, if you want, if there was any spin on it, is that no deal has been pushed further down the line. I believe my chart there need changing. So let's have a quick look over the chart. Of the pound. You can see just where highlighted here around it came in and was very limited. The reaction and just the idea, I guess, of no deal being pushed further down the line saw a slight positive, but we're pretty much exactly where we are now. Where we were, I should say. So yeah, limited. And as a whole, yesterday, Super Thursday, billed to be this fantastic day, was quite subdued. The ECB were dovish as expected, and the fact that he didn't really say too much in the way of new dovishness, I would say, is the reason we're back where we are trading. We also had the FOMC minutes overnight, which we'll come on to, which was slightly hawkish, but again we're sort of back to where we were before that in many of the dollar pairs. Oil, we had the API, obviously Tuesday. DOE confirmed the gasoline big draw, but we did have a big build, so the initial reaction was peculiar. We did go lower to test the low of the day before pushing higher, and in turn stocks, which started the day relatively positive before coming down again around cash open, finished higher, and you can see just the importance of this 2900 handle, something we'll talk about again in a moment. But coming back to Brexit, unfortunately you're going to have to deal with this probably all the way to October. Is Theresa May really going to get a deal passed through before then? We've already had 2 EU extensions as well. They've granted 2 extensions here when they said they wouldn't do it. What's to stop them doing it again? So I think that's why the market is quite unmoved for this. If we just go through some of the details, so just to confirm, it isn't that 31st is set in stone. We have to leave on that day. Anything that's sort of agreed before then can be done. So it's a flextension. The word has been going round. Donald Tusk has sent the message to his British friends: please do not waste this time. So they've given this extension. They want to see results, and whether that can be done or not, I think remains to be seen. The course of action will be entirely in the UK's hands. They can still ratify the withdrawal agreement, which of course has not passed through Parliament yet, in which case the extension can be terminated. So Theresa May had to go and give an hour presentation about why she wanted the extension to June the 30th. And unbelievably, she's been given a longer extension. I mean, that would literally be like going to your professor at university in a group project and be like, look, we've got difficulties coming to the final conclusion. A couple of people in my group I just can't get on with at the moment. We want a longer extension. Is June the 30th okay? And then the professor turning around, you know what? Have all the way to Halloween. And you can see here, yes, it is very much in the UK's hands, but there's been a couple of comments overnight, you know, given the from the EU side of that they can give the UK time to reconsider, time to think about whether they actually want Brexit again. I think in just having a little read through some of the comments on this BBC article on Bloomberg, on Financial Times, it was very much a case of it could well have been longer. Tusk said how it was obviously a long enough extension, but perhaps not as long as he would have liked. I think Macron was playing hardball, and that was his role, he perceived. I think he's certainly liking the sound of his own voice at the moment, is Macron, and while he wanted a shorter extension, he got a longer. So is he actually that happy? But it's not as long as maybe the majority of the EU wanted, because it had to be a unanimous decision for this extension. So yeah, it's all a bit up in the air, I guess, of when we're still going to leave. So when I was coming into work, and I've done this before a couple of times, just writing down on my phone, you know, what's the positive from this, what's the negative. And if we look at the positive, well, yeah, it's the no deal, but I think that's all priced in for the market now. Just having a look at the pound again on that larger chart, you can see the reaction was just so limited. Having a look at the last couple of weeks, well, that low is in play. We're yes in a downtrend at the moment, but if you wanted any proof that that's already priced in, you saw that last night in that extension having hardly any real momentum to the upside or to the downside as well. Back to the headline, so obviously longer than what May wanted, longer than what Macron wanted, but less than perhaps majority of the Euro. So they've come to an agreement there, only as long as necessary and no longer than the 31st of October. I think if everyone was to place a bet on the possibility of it going past the 31st of October, there'd be quite a few takers on that. The UK must hold, so this is part of the extension agreement, the UK must hold the elections to the European Parliament, and if it fails to do this, the UK will leave on the 1st of June. Fine, you know, from the UK's point of view, do that. It will most likely be completely irrelevant anyway, so do it, get on with it. No need to complain or write headlines about it. Let's just move on from that. The European Council reiterates there can be no reopening of the withdrawal agreement negotiations. We're living in a world where when they say one thing, it could well be another. But yes, this is the EU has given Theresa May that deal, and she's got to get that through. Whether she can or not will remain to be seen. Whether she'll still be in the job in future, again, remains to be seen. I know she's threatened or said to Parliament, you know, back my deal and I will resign. It could well be that we get no deal and she's still in the hot seat, if you like, come October, when it starts to get a bit more politically heated in the UK around that time as well. So the majority did want a longer extension, but it's a flexible extension. We can leave before is sort of the summary of that. What did May say to reporters? Well, she came out and did a quick statement, 2:45 a.m. local time. So, you know, fair play to the politicians. They were getting their money, you know, last night, their overtime. I know that there is a huge frustration from many people that I had to request this extension again. The UK should have left the EU by now, and I sincerely regret the fact that I have not been able to persuade Parliament to approve a deal. I mean, I said this yesterday, it's a decision of a lifetime that is going to affect people for plenty of times. If it takes a bit longer, fine. I know it's going to be tricky, and to be honest, do I think we'll get somewhere by 31st of October? Probably not. So we'll be back to more cliff edge talks soon. Also, part of the agreement in June, I haven't actually found a date, there will be a meeting between the UK and the EU where they just come and talk about any sort of progress that has been made. Nothing sort of set in stone that it does, of course, but just more of a catch up to see how that's going. So that's one to keep an eye out for. You know, there'll be plenty of comments that come through around that time. Here is that analysis by Laura Kuhnsberg just on whether this is good news or positive, and really the only good news so far is on the idea that the no deal has just been kicked down the road, risk of no deal postponed, as Katia Adler says on that. The next steps going forward, so while the calendar, which we'll come on to today, economically picks up into the afternoon, I think for today Brexit comments might be picking up in the morning, but then really quietening for the next sort of couple of days. So on Thursday today, the PM will make a statement to House of Commons, so that's something to be aware of. Talks between Labour, Corbyn and May will continue. So again, can we get anywhere from that? Again, up in the air. Also on Thursday, Parliament will break up for its Easter break until 23rd of April, although a further cross-party talks are expected to be held. So of course in this difficult time they've still got to put a shift in. There's also, and I'll post this in the chat now, you've got the statement from the EU just confirming everything there. Just they've detailed a few points going down to number 9, just on the extension and the reasons behind it, so worth a quick look over. Also from yesterday, just as a quick summary, if I just bring in a couple of headlines, that I mentioned the Fed reaction to the minutes, slightly hawkish. If you just have a look at your charts from 7 p.m. last night, you can see the dollar did strengthen a touch across the board. However, stocks, as you saw this morning, pushing higher. So it seems, hawkish, dovish, stocks do not care, and we're just going to keep going higher and higher. And I'll be keeping another close eye on at 2,900. What did the Fed really say? Well, if I just bring this to your attention, give me 1 second to find it. I seem to have lost my Fed comments, but yeah, they were talking obviously about the weak growth as well. How they were happy to be flexible and be prepared to move interest rates higher or lower as needed, but those unusual mix of risks mean they could remain on hold all year. However, there were some voters that did talk about their potential to be a rate hike to the back end of the year, a cautious rate hike at the back end of the year, and the markets briefly moved off that. But I mean, it's the minutes of the Fed. Very rarely do you see a long-lasting reaction from those. It's always, of course, the interest rate decision and the press conference that is the focus. And just having a look at the snapshot there, you can see very limited. Yes, 7 o'clock we saw some hawkish responses, but the reversal from that has been pretty clear to see. Having a quick look as a summary of a whole yesterday, just bringing in the pound, because we did have some UK data out, GDP numbers and industrial manufacturing output around 9:30. You can see here, if I just circle that time, it was better than expected. We pushed to the high of bringing the pound here, sorry. We did push to a high of the day around that point, but it was limited. Brexit's the focus here, so even if there is UK data coming out, of course, the market focus is going to be elsewhere, understandably, and that reaction you can see muted. We are now trading just on that pivot. From a look at today with the House of Commons speech from Theresa May, it might be worth just holding out for that. I think you could have been forgiven for thinking this move just around 7 o'clock would be long lasting, as it did pick up, but only to get choppy. And I know there's better markets to trade, but from a point of view to get short, technically the break of this trend line and this sort of overnight yesterday afternoon support that we hit this morning could open the door further to the downside. And of course that low that you can see bottom left of the picture on the 9th, well, if that was to come into play, and the low from the 8th, well, the run down to the low that we had of this month could come quite quickly. To the upside, I think as simple as putting a resistance point at 130, 150. Above that, a bit of free run to the highs that we've got from the week as well. But I think focus should be elsewhere. Looking at the calendar this morning, we've had some numbers out of Germany, final numbers, so not likely to have moved the market as you've seen. We've got the French CPI coming out, or came out 10 minutes ago, and then that's really it. That's really it for the morning. It's going to be a quiet morning. If Super Wednesday was built up to be a market full of opportunity, well, this morning is going to be less so. Into the afternoon, we've got the weekly initial jobless claims. We've got the final demand PPI year on year, and the core numbers for that are coming out at 130. So that's always something to keep an eye on from the US perspective. The US numbers yesterday were better for the or slightly better for the core, worse for the main inflation and the reaction. Saw a bit of dollar strength right on the ECB decision and press conference, but again, not too much in the way of movement there. However, one thing we do have today is a fair amount of speakers. So we've got ECB speakers at 1:30, and then a few out of the US, 2:30, 2:40, 2:45, and then 7 and 9 o'clock into the back end of the UK day. So from a speaker point of view in the afternoon, while there is a bit of data at 1:30, you can see from then on there's always going to be little periods of time just to be aware of, maybe put notes on or alarms on, just to be alerted for that the day after the minutes, any confirmation of what was said or any changes to what they think now will be things to have a look on. Also yesterday, couldn't really expect him to keep his mouth quiet, could you? Donald Trump coming out and tweeting his say on the Brexit situation. Too bad that the European Union is being so tough on the UK and Brexit. The EU is likewise a brutal trading partner with the United States, which will change. Sometimes in life you have to let people breathe before it all comes back to bite you. Of course he was going to have something to say on that, as he does on everything. Also worth, on the Financial Times, it was, when I was reading this morning, it was quite interesting to see a few comments at the back end of the article. Some leaders warned Britain not to expect further extensions beyond October. At the end of October, we were 6 months down the road. It will be increasingly difficult to grant an extension. That's not even them saying they won't. I think the idea that we can get to October and much will change is still relatively slim. I know it's a lot more time, but Parliament aren't going to agree to Theresa May's deal. So it'll be up to maybe May and Corbyn to see what they can do, bring that back to Europe. But if Europe are going to go hardball on what they want, well, we could be back to October, and then the idea of Brexit not even happening at all is increasingly more likely, which in turn perhaps is then your pound positive. Of course, not with any twists and turns to happen before that, I am sure. So yeah, on a calendar point of view, relatively quiet morning. Keep an eye out for Theresa May in the Commons though, as that comes around sort of midday. Last time I checked, I'll confirm that time. Bit of US data in the afternoon, but the speakers will be the main driver. Looking at the charts, just to wrap up how we are trading. Yesterday the euro 130 was the main mover, but it was relatively I should say contained, especially compared to the last meeting that we had. We've already reversed that. We've already reversed it. Looking at where we're trading, if we have a quick look at opportunity wise, the high that we almost made yesterday, but from the 27th, is still a key area that I'd like to see us test. And depending on the strength or weakness of the dollar, that with R1 does look like a good place to get long. The trend line we talked about yesterday, you can see held up, albeit with a little false break, but that comes in around just above the S1, and potentially when price gets down there it would of course be higher up, but still for that continuation, if you like, of dollar strength or euro weakness, I would prefer to see this go than perhaps looking to get too aggressively short around here. Aussie dollar briefly weaker overnight, but we're still above the range that we broke through. You can see that on Monday holding the Monday the break acting quite well, and yesterday the retest of that and the pivot and the overnight high, what was the overnight high, working good. And similar sort of pattern today. I'll be keeping an eye on that pivot. Second test of that might lead to some dollar strength and break through, but as long as equities keep going, the Aussie I believe will do so as well. Looking for a continuation higher. You can see the trend line coming on from those highs working quite well. The yen, as a sort of recovery of US stocks last night, did weaken, and you can see again similar to that euro, every time we look to sort of get away, keep an eye on these trend lines that form. We're looking just to come back down and almost make that third test of this level here. So this is something I'd be keeping an eye on, how we perform around this level. Also a key point from the high of the 9th, or the morning of the 9th, and low of the 10th morning. It's a really key potential support area. I mean, my personal bias would be to look for this to break down, but as a support area goes, it's not too bad. Stocks in the US, that recovery into overnight and a bit this morning, 2900, massively important in the S&P. I think, yes, you could still get a bit of a push lower, but at the moment this market is going higher, and I feel while there will be short-term intraday moves to get short, you just got to go with the flow. Just got to go with the flow. Potential to get long S1 looks good technically, but of course if it's on that cash open, almost wait for that false break before getting in, which has been the trade of the last 2-3 days there as well. The Nasdaq performing stronger throughout the day, and that has pushed on to make a new high for the year this morning. And if we just put this on that longer chart, just to have a look at the percentage we are away from an all-time high. So, you know, Trump can just get ready for that. We are 1.15% away. I mean, they could easily do that today or by this week. Having a look at oil, longer picture, that 65 handle, the 65.73 still very much tradable to reach, but as a short-term resistance, as I've mentioned, I do like the look of it. At least for an area for the big players to take some sort of profit or anyone to get short. Interestingly though, again, the reaction to the DOE was overall by the end of it a bit positive, and this has been the case when there has been, you know, negative news, and the build yesterday was 7 million, so more than expected, a big build. The market hardly pushed lower. It takes you back to, say, the S&P 2017. Any bad news, buy the dip. If there's a reason oil comes lower, well, get in and buy it if it's going to go higher. While it's a key resistance, and we failed yesterday to break above the high of the year, just from a sentiment point of view, that is quite key. So I could see that we could break through those highs eventually and get a test of 65.73. But that remains to be seen whether that could be this week or not. Having a look at gold, the dollar yesterday slightly weaker into the morning, but then stronger. Then stocks were coming down. Gold did eventually break through into the back part of the day. However, we are just drifting a touch lower. Gold quite good with the trend lines, and you can see there's one starting to almost have formed this morning. We had a bit of a false break above that this morning, but that still would be something that I'd just have a look at for potential area to get long should we hold back above. The support area for now, previous high of yesterday, so you can see a good technical level there. Break through that, then there might be a bit of a free run, but for now contained within those parameters. Any questions as usual, please do let me know. I'd expect it to be a relatively quiet morning, to potential to pick up around sort of midday into the back end of the session. Brexit, October delay, and if you have a look at the pound, it's already back to where it was just before we started the briefing. But I hope you all have a good day. The Masters starts today, so let me know who you've got, who you're backing. Whether the UK can beat the Europe will be one to keep an eye on as well in that. Hope you all have a great trading day, and I'll catch you all later on.